Hey guys, Dave with Moneyology here. Hope everyone is having a great weekend. Today is November 2nd, 2019, and this is the weekend market review. We just went through about 20 charts from a monthly perspective, analyzing some of the longer term trends. Now we're going to do the same thing from a weekend perspective or a weekly perspective for the weekend market review. We do this every week, and these particular charts and videos are publicly available. And I'm proud to say we've had a really good gauge of the overall economy and the markets rather. And I think we're gonna be riding a bullish wave into the next 3 to 6 months. And let's go into these charts to take a look at what I'm seeing. So starting with the 10-year Treasury, and 10-year Treasury right now is consolidating after some nice moves and some quite volatile moves. But look, we're creating new highs on the PPO. That's a momentum oscillator. We struggled above that 13 EMA, but perhaps this is a back test right here. So watch this level carefully. If this breaks down, then perhaps that's a negative indicator for equity markets. However, if this bounces here, this ultimately, I think, moves towards that 2.1 level, possibly as high as 2.5 or 2.65 before this rally ends, in my opinion. Dow Jones 2500 index, you see that this trend line was broken to the upside, and now we close the week at 52-week highs, all-time highs, and I see no reason why this particular rally is going to be stopping anytime soon. With PPO just crossing above zero, this has got a lot of room to go. Now, copper pulled back a little bit last week. Perhaps there was some negative news about China, but again, that's not a surprise because you see there are a lot of points of resistance in this trend line. So we're trying to break above it. So we broke above the 26 and 13 EMAs, which is very bullish. It's got some work to do. It's got to break through this level and then this level. But copper is primed to be a key beneficiary of this up move in the markets. Emerging markets is another area similar to copper that does really well when you see just the overall global economy starting to pick up in unison, and that's what's taking place right now. Notice these EMAs are curling right above it. This is a beautiful symmetrical triangle breakout, and now the first test is going to be that 61 level. But I see no reason why we're not going to test that 44 level first before any resistance. But you've heard me from last week. I think we're headed towards that 50-51 level relatively soon. Gold had a nice close to the week, closed at 1511, and I said in the previous PM public video, I said gold would have a really potentially have a nice balance based on the internals of the shorter term charts. I said I wouldn't be surprised if we hit around the 1520 level, and we got to 1518 last Friday. So closed on around 1511, and there's no reason um, but to assume that gold is going to be going higher soon. Notice that despite PPO being in negative trajectory for 9 to 10 weeks in a row of negative price action or momentum action. Notice we've just dropped like 0.5%. I mean, it's really nothing, guys. So gold is setting up very nicely. Junk bonds have hit all-time highs right now, and here again we've got the moving averages serving as support, and there's nothing bearish here aside from the fact that this particular move had slightly negatively divergent momentum highs to the previous one. So perhaps a pullback in the near term is possible, but longer term, notice we've been in negative territory for quite some time. I think it's going to be ready to break higher sooner rather than later. Housing index, beautiful, bullish, extremely bullish momentum, and we're headed, as we've explored before, at a minimum towards those 2018 highs back at 364. Crude oil is the most interesting index, or rather asset class right now, because it's been exceptionally volatile, and just charting this has been fun, but really challenging. And even though my hunch is we break to the upside, at this point, it's just been going either way. But I'm seeing enough strength to give me confidence that crude oil eventually breaks to the upside. Notice PPO has uh, just broken above zero, which is really the first time since February of this year that it's done so. So I think we're in the very, very early stages of a crude oil, a really nice rally that probably takes shares or the price of crude oil all the way towards that 74 level. Nasdaq breaking to new momentum highs, new all-time highs here. That's not what you see in a bearish environment. And you've got PPO just breaking above zero. So you've got a number of weeks of bullish price action and momentum. Nasdaq equal weighted also breaking out to new highs, and again that just suggests that this rally is most companies in Nasdaq, or the average company in Nasdaq is participating here. A couple of ratio charts: the 10-year to the 2-year Treasury. Looks like this particular trend line is going to be broken to the upside, and that will be your so long case for a inverted yield curve. You know, a lot of folks said inverted yield curve was a basically a forecaster, a, a foreshadower of a future recession. But you know, they said the last 3 times it's happened, guys. 3 times is not a statistically significant sample. It really isn't. And I hope that if this proves to be accurate, and this particular breakdown here it was a false breakout. I hope that that's the last time we hear about this inverted yield curve as a good indicator of a recession, because 25% of the time is not, you know, if it's 1 out of 4, that's not a strong statistical sample. All right, so the high yield bonds versus the 7 to 10 year treasury bonds. I think eventually high yield will start outperforming the treasury bonds, but right now we're struggling around that 50 RSI level. So perhaps that's a sign that this rally is a little bit exhausted. But we'll see this week. Perhaps we break back higher. But if we break below this 13 EMA, then I'm starting to get slightly concerned that this rally may have run out of steam. Russell small caps versus large caps. I'm still looking. I still want to see the small caps start outperforming the large caps. It's done so momentum wise, but it needs to follow through on price. 20-year treasury versus the tips. And now you found just this last week, the 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 20-year treasury rallied against inflationary. So deflation won out against inflation this week. And is this the start of a new trend or just a bounce? We'll see. I think ultimately we're headed towards this area before this market rally is over. But nonetheless, you got to watch it very closely for potential trend change. Here's discretionary versus the staples. You see the discretionary was building strength up 40 basis points this week. And if it can break out above this trend line, you're going to see a nice move in this underlying ratio. Small caps, again, broken this downtrend and the 50 RSI level. And unlike NASDAQ, unlike S&P, this is nowhere near its 2018 highs. So it's got a lot of work to do, but a lot of opportunity for relative outperformance. S&P equal weighted, all-time highs. S&P large cap, or SPX rather, broke the trend line and closed the week at all-time highs. So I see no reason why, with PPO just having crossed zero, why we're going to see anything but upside price action in the near term. Here's the banking. Regional banking ETF has broken out above this downtrend, but again, nowhere near the highs of 2018. So it's got a lot of upside opportunity. Semiconductors, beautiful upside breakout here, and semiconductors leading the market is what you want to see if the global expansion is continuing. All right, here's the SPY, just a different representation of what we saw with the SPX. Breakout, all-time highs. Breakout is very positive. Global stock market ETF, also similar type of pattern here, and I'm liking what I'm seeing. And this is a great place to, if you want to ride equity momentum, This is a great risk reward, for example, on VTI, stop loss below the 154 level, and see how far it runs to the upside. Transports, Dow Transports, even though it pulled back 1% last week, I think that this is in a bullish trend right now and likely has resolves itself higher. But again, it's not near its all-time highs, unlike some of the other indices. So perhaps some relative underperformance, but nothing to be concerned about at this juncture. Okay, US dollar. I think the US dollar is on the verge of a major breakdown here. And if it breaks that 97 level, I think we're heading very, very quickly to 90, 95 and a half, and likely as low as 91 before this particular pullback exhausts itself. But this is very bullish for commodities if this occurs. The developed markets very strong right now, breaking out not to all-time highs, but it's breaking out to new 52-week highs. So it's got some upside opportunity. And finally, I think just two more charts. Volatility. So I said that I expected volatility to hit that 12 level, and we did it. We hit it even. We even dropped slightly below after rallying into the end of the week. Um, I think we're going to break this level eventually. We might bounce a little bit, but I think ultimately we're headed towards that 9 level because there's just a lot of weakness and negative divergence right now in the volatility space. Finally, the 5,000, Wilshire 5,000, breaking out to new highs is very, very bullish, breaking out right above this downtrend, above PPO, above zero. And overall, you just you see what I'm saying? There's a very bullish picture in the overall markets. And I think you're going to see a lot more upside. And you got to focus on the commodity names. That's where you're going to see some of the most explosive gains in the sector. And that's what we'll be doing in the premium videos, as we have been doing uh, throughout the week and weeks in the past. Take care. And if you haven't done so, please consider joining us at Moneyology Premium. Now, for just $37 a month, you'll get access to 3 to 5 premium videos throughout the week, and also if $37 a month is too much for you, and you might be just interested in one or two sectors, then consider joining us at patreon.com/moneyology. There you'll be able to get for $10 a month access to all the precious metals videos that we do for the month, or the same for uranium. All right. So have a great trading week, investing week, and just a wonderful week in general. Take care.